Hello, let's start this consolidated financial statements. This is one unit that we will be doing as part of the investments of company. If we look at Tata Group is a business conglomerate which is operating in over 100 countries and over 5 continents. And this group has a strong presence across the diverse industries ranging from agrochemicals to hospitality. Now, Tata Steel basically is the world's second most geographically diverse steel producer. So I thought that let us look at this annual report of Tata Steel so that we understand actually how the investments of organizations work. So I have picked up this annual report of 2016-17 where the company has provided their financial statements for the 110th year of their operations. So I will just scroll down the annual report to just look at what are the contents. When I look at the contents, there's a lot of qualitative information, and then I will be rather focusing on the quantitative information. Here, I am more concerned about, or I am more focused upon the financial statements here. The financial statements are here in page number 165, and the consolidated statements are in the page number 247. Now, these two statements are something that we will be actually working on. Let me just check what does the stand-alone financial statements mean. Now, the stand-alone financial statements, if at all we see here, is the balance sheet that has been given. As we remember that we provide this is an Indian company which provides the information or the financial information as per Schedule 3 of Companies Act 2013, and that's what we'll see here. A balance sheet for 3 years, 2015, 16, 17, because this company has adopted this Indian accounting standards for the first time. It provides this information of the last 3 years on comparative basis and also does a reconciliation. Now, when we look at, let me just zoom it to some extent, right? When we look at this balance sheet, I find that the total assets are 1,11,465 crore rupees in the year 2017. So would be the liabilities. And when we look at the statement of profit and loss, we find that the profit before tax of the stand-alone performance of this company is 5,356 crore rupees. Now, when we scroll down further, you find that the statement of changes in equity as per the Schedule 3. And then you find the statement of changes in the equity on this page, and you find the statement of cash flows that are recommended as per Ind AS 7, and you find that you have got the notes, all the 5 items. One, the statement of balance sheet, then the statement of profit and loss. You find the statement of changes in the equity, then the statement of cash flow statements, and then you have these notes which actually provide all the information that is the material information related to the company. So if we look at the standalone numbers have provided us that the company has basically reported a revenue of 53,260 crores in the year 2017 with a profit of 5,356 crore on standalone basis, while the assets are 1,11,465 crores on standalone basis. Now let us see if at all there is anything that is different in the case of consolidated balance sheet. In the case of consolidated balance sheet, we see that the total assets of the organization are 1,73,333 crore rupees. So would be the liabilities. And if we scroll down, we find that the profit before tax for the consolidated financial statements is 2,473 crores. If at all we see here, the consolidated profit is less than the standalone profit. The standalone profit was 5,356 and the consolidated profit before tax is 2,473 crores, which is a reduction of 2,883 crores. Now, what does this mean and how is that it's actually going to help us? So this consolidated statement help us in understanding how is that the investments made by this company in its associate companies or the subsidiaries companies or the joint ventures are performing, and what is the impact of those financial performances on the total financial position of this organization. Tata Steel as such has investments in 255 subsidiaries, 22 associates and 19 joint ventures. Now, the Tata Metallics and the Tata Sponge are a few of their very well-known subsidiaries. Let us just see how these subsidiaries really have an impact on the financial position of organization. So for which we have prepared this, we will just go through this PPT to try and understand the basics and the applications of consolidated statements. Let us look at the statutes and the standards that will be applicable. Now, let us look at this basic definition of consolidated financial statements. The financial statements that are provided by a group in which the financial position, the performance, and the cash flows of the parent body along with its allies. Now, when I say the allies, would be its subsidiaries, where all the information comes as that of a single economic entity. We call this as a consolidated financial statement. Now, when I say a group is the entity of its parents and its subsidiaries. Well, the definition of subsidiary is that entity which is controlled by another entity. The word control becomes very important. We will go through this definition in the next slide to come. So we understand that whenever we are talking about consolidated financial statements, we consider the parent plus the subsidiary as one single economic entity. Now, before the commencement of this Companies Act 2013, the consolidated financial statements were actually not mandatory, and the clause 32 of the listing agreement actually mandated that all the listed companies should publish consolidated financial statements. This is more to do with transparency to the stakeholders and providing them more information and in-depth information. But here, when we come to the new act, that is the Companies Act 2013, now this is mandated. Now, as the erstwhile Companies Act did not mandate, now the current Companies Act 2013 mandates that the presentation of consolidated financial statements should be made under section 129 of this act. Earlier, when we spoke about the earlier act, the choice was given to the companies to provide this consolidated financial statements, but under clause 32, they had to prepare it. And that's why when you look at the earlier Tata Steel annual reports, you would find a standalone financial statement and also a consolidated financial statement. Those financial statements earlier to Companies Act 2013 were prepared as per Accounting Standard 21. The Companies Act 2013 provides us guidance on the preparation of CFS, that is the consolidated financial statements. Section 2 of the Act defines the parent company and the subsidiaries. Prior to this Act, Section 4 of the Companies Act 1956 defined a company holding the majority of the shares with the intention of acquiring control over it is the holding company, and the other company the subsidiary. But as per the Rule 2 of Company Definitions Rules 2014, the conditions are laid down to define the subsidiaries. The formula has been made clear on the definition of the subsidiary. Let us try and understand the formula that they have given. Now, earlier, it was only about the equity capital that people used to hold. That is what it said. Anything that a company holds as majority of the shareholding. Now, the shareholding was not clear in our earlier Companies Act. But in Companies Act 2013, the holding has been made very clear, which means investments made in the form of equity share capital and also convertible preference share capital. Wherever there is a potential ownership coming up or potential rights, what we call it as voting rights, that also will have to be taken as part of the holding or part of the share capital. In this case, we will consider it for calculating the holding. Now, the percentage that has to be calculated for holding in an investee company is the total investments in the equity share capital and the convertible preference share capital by the investor divided by the total equity share capital and the convertible share capital in the investee company into 100, which gives you a percentage. Now, this percentage actually helps us to define whether the subsidiary comes under section 2 of subsection 87 or section 2 of subsection 6, which means if at all the company invests more than 50% in an investee company, then such entity is called as subsidiary under section 2 of subsection 87. And if at all it is more than 20% but up to 50%, then such entity will be called as associate under section 2 subsection 6. If the investments are less than 20%, then such entity is called a joint venture. And the joint venture has not been defined under the Companies Act, while it will be accounted for. Now, when this section 129 subsection 3, when does this come to force? Now, whenever you have decided that these three rules apply, that is, if at all, the earlier one, as we said in the holding, if at all it is a subsidiary, if the entity is a subsidiary, if the entity should be an associate, or if at all the entity is a joint venture, then the section 129 subsection 3 triggers. Now, what is that it says? This section tells us that a company which has got subsidiaries will have to prepare the financial statements as per Indian accounting standards, and it will have to follow the principles, accounting policies of the parent company. Now, when we say subsidiaries under this section, we include the associate companies and also joint ventures. The rules of this section 129 subsection 3 are mainly related to the designing, or rather we can say the presentation of the financial statements. The rule 5 and rule 6 are more relevant to the holding companies. The rule 5 speaks on the form number AOC1 that has to be filled for all the subsidiaries of the parent company by this parent organization and submit it to the ROC. While Rule 6 mentions about the disclosure of the subsidiaries and provides the guidelines on preparing the CFS, Consolidated Financial Statements, and also mentions that they should be prepared as per Schedule 3 of the Companies Act 2013. So what is coming up here? We talk about preparing the financial statements as per Schedule 3 of the Companies Act, and we also talk about preparing the financial statements according to the accounting standards. Right now, the accounting standards are Ind AS. So, Ind AS would be applicable when we prepare this financial statements. We will get back with the next part of the PPTs to complete our entire course, entire unit, sorry. Thank you.